Welcome traders to yet another educational video of Nifty Short Term View, episode number 47. Currently we are looking at the Nifty Futures daily and the hourly time frame charts. On the right hand side I have the daily time frame chart, and on my left hand side I have the hourly charts. In terms of trend, I think it is pretty clear that in the short term chart and the hourly chart the trend is certainly up, but in the daily time frame chart we can see that the trend is flat right now as the price is trading between both of the moving averages. Now, first thing is, if we check what happened yesterday, because in last 2 days there has been a lot of volatility. If you just see, and we forget everything else, if you just see the high and the low of last 2 days, it has been amazing. Yesterday the high was close to 16,014.60. Low was 15,752, and we had a very big inverted hammer, and this inverted hammer probably would have put a doubt in everyone's mind yesterday at the closing price that probably this is a start of a reversal and markets may test lower levels. It was not sure, but at least a doubt would have come. But what happened yesterday was completely outstanding, and you can see that bulls took control of the market very, very strongly, because first of all, we had a gap up and market opened at 15,796.85 and it closed almost near the day's high. If you can see, if there is only very, very smaller wick which took resistance from yesterday's wick of the inverted hammer, but otherwise it is a very solid candle. Now, what was the reason of yesterday's pullback? The reason of yesterday's pullback was mainly, I believe, in this zone somewhere over here. A lot of volumes have been generated, and you can see this POC, point of control. This has acted as a very strong support. And what was the reason of yesterday's sudden sell-off? Well, guys, the reason was, you can see this particular band which I had shared in my previous videos from 15,778 to 15,931. So basically this 15,931 plus this was probably the starting point of this entire gap. So this particular band acted as a support. So we saw an intraday penetration, but finally at the day's close, price retraced, and then today we had a bounce back and prices have started going up. If you check properly the comparison of the rally of the price, and if you see the volume, both are completely contradicting each other, which means that we can see prices are going up and volumes have been coming down in today's up move. Plus, if you check properly, the volatility which we have seen in last 2 days has been very, very amazing. So in case if there is a short-term trader or possibly even an intraday trader, I would say, would have got a lot of opportunities in this up and down moves, but the stop losses, when you're trading, obviously you'll keep a stop loss. So the stop losses and target both have, I think, gone higher due to this higher volatility. Now, as a trader, as a positional or as a swing trader, what should I understand from this current stance of the market? According to me, it is very, very clear that we are still in a pullback mode in Nifty Futures. This is an entire resistance zone, and it is very difficult for anyone to predict that actually what is going to happen. This is certainly a resistance zone. All right. Now, what is going to happen over here? No one can say. One thing is clear, that bulls are not very, very strong, are not very, very keen to continue this rally higher. But looking at the sectoral indices, if you just have a look at the sectoral indices properly, if you see Bank Nifty, metals, auto, all these sectoral indices have closed in green. I think the major responsible sectors were auto pack, which is already outperforming, and I have been talking about this since long. And second one was obviously FMCG. This was the main participant in the rally after the auto pack, I believe so. So what is happening over here? The sectors which were laggards, like banking, if you just leave this particular candle of 5th July, overall, if you see, prices have been in a pullback mode. Even if you see metals, like metal, yesterday we saw a inverted hammer, and today we have seen a hammer. So even a sector like metals, which is not very, very strong currently, although I am maintaining a stance that I would avoid going short in this particular sector, which I have shared with all of you in my weekly sectoral analysis. Even this weak sector has been able to pull back today. So overall, you can see that the market is trying to go higher slowly and steadily. Even pharma is not a very strong pack. This is the resistance zone, you can see, and pharma today has been able to close above it. So we can see prices are ready to pull back. Even reality has gone up. So in case if this rally continues, if the bulls want to continue this rally forward, then I think the first level which could be tested in Nifty futures could be 16,080, and the second level would be 16,176 to possibly 16,180 levels. All right. Now let's have a look at the Bank Nifty. In Bank Nifty futures, you can clearly see that we have almost filled this particular gap. You can see over here this gap. We have almost filled it. And even same thing which we saw yesterday in Nifty futures, we had an inverted hammer and then we have a positive candle. Same thing is visible over here, my friends. Nothing, no big change. And if you see yesterday's bottom somewhere over here, and what is the reason of today's pullback, which is extremely volatile, is again this range, probably somewhere over here where a lot of volumes have been generated, and it is a POC, which is a point of control. Again, if you check, the size of these candles are very, very big. And this clearly shows that the volatility in last 2 days have been amazing. And if you check at the volumes are again dropping on the downside and prices are rising up. So this is certainly not a very good sign. This is not showing a very good sign that bulls are very, very eager for this rally to continue. Now, if at all the bulls want to continue this rally, I think this particular level, 34,415 to 34,420 would provide a very stiff resistance. I think we need to stay above it continuously. And in case if bulls show their strength and continue this rally, then the next level to be tested on the upside could be somewhere over here, 34,590 and probably even 34,800. But these levels will be tested, my friends, only if we are able to surpass this level and sustain above it. Because mind you, in last 2 days, we have not been able to go above this level and sustain above it. We might have gone above it for a while, but we could not sustain above it for a very long time. Now, apart from that, I think there is one sector which I had shared with all of you. First of all, Autopack, I had shared Eicher Motors, I think, on my Twitter handle also. Couple of days back, it was trading at a very strong support zone, and we can see a very beautiful short-term rally in 2 days. I had also shared that Maruti and probably even other stocks are looking positive. Even Maruti has rallied today. One particular sector which has, taken my attention is the consumption index. Now, what is the reason for that? The reason for this is this particular index, according to me, has been very, 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 very choppy. It is suddenly making a higher low, then it makes a lower low. You can see over here. This is a low. This is the second low. So this is a very good sign. This is a sign that probably we could make a new high. And when that sort of rally happens, then suddenly we make a new lower high. So this is a very confusing thing for anyone. But first time I can see this particular rally which has happened in last 3 to 4 days shows a lot of confidence, and we have been able to establish a new high in comparison to this one. Now, once if we have a higher low, all right, if we have a higher low somewhere over here or whenever it happens, and this could be the previous low, probably then it could even look more interesting. So as of now, it's too early to say anything, but I think traders should keep a very, very keen eye on this particular sector and keep your eyes open on it. All right. So trade less. Markets are still not in a very strong uptrend. I think it's very, very early to say that. Yeah, there are a couple of sectors which are trying to go higher, but be very, very careful when you're initiating your trades. Do not jump on to uh, just absurd moves. Analyze your trades properly at least 3 times, because the volatility in the last 2 days has been extremely, extremely scary. Trade less, trade wisely, and stay safe. Thank you.